Alrighty, welcome back, Alpha Hunters. It is a terrific Tuesday. Okay, we got CPI this morning, and I don't even know what the CPI number is, but we'll take a look. And the market doesn't care whatever it was. So let's start off by looking at that CPI. We got core inflation came in at 0.3%. Forecast was calling for 0.3%. Let's see. I think everything came in. It looks like everything came in line except for inflation rate month over month, which is kind of interesting. Why is that 0.1% compared to the forecast was 0%, but everything else is in line. All right, that's interesting. So everything came in line. Core inflation rate 4%. That's about the main thing. That's year over year, right? That's year over year. So the inflation rate year over year came in at 3.1%, and the core came in at 4.4%, which was in line. Both of those were in line. All right, the monthly number for just the top line inflation just kind of little off there. All right, might be a rounding error, not a big deal. So basically, we came in line. Okay, tomorrow we're gonna get Fed day, and we'll see what the Fed thinks on inflation. I tell you what, let's just take a look at how is this year over year trend kind of going. Turn off the log chart. So this is basically the inflation rate. You know, obviously last year, huge amount of inflation's been coming down. It's been coming down throughout the year. Past 6 months hasn't really continued to decrease. So we got that 3.1 reading. Last month we got 3.2%. Okay, I mean, okay. Still not getting below that June number that we did put in. So it'd be kind of interesting to see what we get there for December. You know, the December number that we're going to get in January. And we'll take a look at that core number real quick. How is this looking? Core's being kind of stubborn, man. It has not been falling off nearly as much. Kind of even flat. You know, you can see, let's see, one, 2, 3, 4, 5, 6, 7 months in a row that it had dropped. This is the first month we actually didn't drop on the core amount of inflation. We actually were just flat, which is kind of interesting because 2 years ago we actually were flat at 4%. August to September of 2021. So that's kind of interesting. At the same level there. So okay, so that's kind of what inflation did. But back to the SPY. Well, we got a nice little gap down this morning. Take a look and see what the market did. So the market was looking pretty positive, actually, up about 0.25% pre-market. I know that because we're currently 0.25%, and then we got the inflation number, right? So, and then it kind of dropped off. It's kind of interesting that we did drop off, or even had any kind of move. But it didn't really matter. We did gap down a little bit and then traded a little bit lower there in the first 10. Then it's been kind of just, bullish ever since. So, yeah, I mean, it's looking pretty good. Still just making its bullish move. Kind of mentioned this at the end of last week. Seems like we're going to get above this level, especially the way we closed Friday. And we're just going to make a run. Who knows where it stops? I mean, it might not stop until early next year. It might not stop until late December, maybe next week. But I don't know. Not really a believer in it still, but mostly that's because there's still some other things out there that I think the market just ignores, and they just pay attention to AI. Speaking of AI, here's the Qs. Pretty much a flat gap. Nothing flat open, really. Nothing, no major gap there. A little bit of a quick trade lower, but it's higher. Definitely trading higher on the day. Up 0.5% there on the Qs. Currently pretty much at the day high right now. Looking pretty good. Okay. IWM. IWM. Nice gap down. Definitely traded lower. How low did this thing get today? Jeez. A little bit of a gap down, about a 0.1% gap down, but I mean, this thing traded down to almost 1% down on the day. You can see it's come back quite a bit, down basically about 0.1% right now. Nice little lower wick coming in on the day. And I mean, it looks like it's about set up to break up out of here on the IWM here. Looking pretty good. The DIA, the Dow Jones Industrial Average, up 0.3%. Okay, up 0.3%. Looking pretty good. Nice little gap up. Pulled back on the start, pushed higher, down a little bit from its highs about an hour and a half ago. RSP, pretty much flat open, traded lower, bounced. First hour and a half, okay. Hasn't had a crazy bullish day, but definitely got hit pretty good in there in that first 10 minutes. Nice little lower wick. Definitely been breaking out here recently, especially yesterday. Looks pretty good there on the RSP. Okay. So that's kind of a quick look at all of those. Yeah, it doesn't seem like CPI is really bothering the market. I mean, whenever economic numbers come in line of the forecast, typically you don't see much craziness kind of go on. Last night I was doing a little bit of look around, and WALCL weekly 1 week. This is that Fed. I replaced the old Fed number, basically indicator I was I had kind of been watching for the Federal Reserve balance sheet data, and I've been kind of trying to find one in TradingView that I can see what the balance sheet's doing, because the one I was looking at was kind of deviating from basically this chart pattern here, which has been what the Fed balance sheet's been reporting. So I don't know why it was the old one was deviated so much from this, but it doesn't matter. This is the one I'll be looking at going forward, the WALCL, and this is in weekly time frame because they do update this every Wednesday. Every Wednesday, they update this after the bell. I think it's about an hour after the bell. They give their weekly Fed balance sheet report. And even though on the bottom, you see down here, you see it on Monday, that's just, it doesn't mean anything that corresponds to that Monday or anything. It's just, that's just the day, the trading day that it's associated in that week. Okay. So don't worry about Monday down there. Just know that that's the week it's the data point is on. And yeah, there you go. So you can see the Fed's been drawing down quite a bit, especially ever since the regional banking issue that we had back in March. You can see a huge uplift there for 2 weeks following that regional banking issue, and then they got back to dropping it off. So there you go. That's so I might get back to looking at this. What's really kind of interesting is, with how much this thing's been drawing down here over the past 6 months, seven months now. It doesn't seem like the market is too worried. Let's go. Kind of want to look and see what this might look like back in pre that big spike. So it was increasing even going into the the 07, 08. Obviously there's no data before 03, but there was you can see that there was increasing even going into the housing bubble. So it's kind of interesting that even though they were increasing the Federal Reserve balance sheet, they are decreasing it now, and the market's still going higher. So maybe, I don't know. I was trying to see if maybe there was a correlation there. There was a pretty good sell-off in the market late 2018. The Fed was selling down before that. 2015, 2015, 2014, 2015. There was some issues. Like, the market wasn't extremely bullish, a very kind of choppy time period. So obviously we know what happened here. That is the pandemic. So I'll be curious to see just how far down they want to get the balance sheet before they maybe normalize it, and that kind of stuff. But as far as you need to know, and basically the thing is like, do we need to look at this every day? To be pretty honest, I don't think so because it doesn't seem like there's a correlation to any kind of major bear market activity. But there's also not a great amount of data with this Fed balance sheet report that they put out. So it's a data point. Maybe over time there will be something that comes of it, but as for now, it's kind of hard to tell because leading into the real estate issues that we had back in '07, '08, '09, not there's not any kind of correlation there. So and obviously we haven't really had any bear markets throughout the 2010s, even early 2020s. I don't really factor in the pandemic, so I'm not going to worry about that. VIX continues to push down. I'm on a weekly, so look at that drop off in the VIX. People not getting worried. So we're gonna have to really kind of Let me go back out to a weekly. Zoom out here. Let me see. Put a log on. There we go. Log. There we go. So we're getting back down to the levels that we had pre-pandemic VIX. Wow, look at that. Pre-pandemic VIX levels. That is cool. So that was when the market was making basically all-time highs right before we had the COVID pandemic. And so we're back at those kind of levels right there. All-time lows on the VIX, I believe it's going to be right there around 2017. I think this is an anomaly here in 2006. I don't think that was. I mean you could say it was definitely as a data point that registered, but it wasn't like it protracted. It's some weird. It might have been like a little flash lower on the VIX, but I remember this 2017 period. There's a lot of low volatility right there, and then 2018 was a very, very volatile year. Okay. I mean, we're getting down kind of in the lower ends, though. I can put two boxes here. Take a look at this VIX. And get the rectangle. So you obviously get kind of like this zone down here, kind of getting into it, right? You got a lot of lows into that area. Sometimes go a little bit lower, and then you also got a lot of highs. I'm not gonna worry about those super high spikes. So basically, the way to kind of read this is at these super low levels, you want to be a little bit more cautious, not say bearish, but cautious, right? You want to be kind of maybe gathering that plan together to protect yourself of possible issues, any kind of value protection measurements you might want to take. I'm not saying be bearish. I'm not saying not be bullish. But I'm just saying it's a good time to start, dusting off that plan of maybe what you would want to do. Because bear market, if we go back into a bear market, even next year, or maybe if it's 2015, not 2015, sorry, 2025, or maybe even 2024, we can take out 2-3 years of gains really quick in a bear market. So all I'm saying is, it's better to be prepared than to be caught not prepared. You can see anytime we get up, definitely over the 34 level on the VIX, basically it's just time to be bullish. Anything in between, you're probably just not better not worry about it. Just don't worry about it. So, anyways, just a little look there at the VIX. I thought that was pretty good. See where we are long term on the VIX, especially since we were breaking down here recently. Yeah, VIX been getting crushed here this quarter. All right. So back down to the pre-COVID low there on the VIX. That's really cool to see. Let's see the DXY. Get back to a daily here. So the DXY, nice lower wick here coming in. Kind of like this consolidation here. Kind of like this consolidation. Definitely would have preferred us to, like, if you were trying to be bullish here, or you want to be bullish on the dollar, you want to see, I would have rather seen us break out continuation today, and then say maybe tomorrow or maybe a couple days later, see that lower wick come in, retest into this neckline, and then continue higher. Something like that. That's what I would have rather seen, but still possible. Still possible. We'll see what happens tomorrow. Obviously, a lot of things will probably get determined on maybe the next couple weeks of movements. Probably come on the decision of Fed day tomorrow. So tomorrow afternoon would probably be kind of an important one to see. But this could, this could very much easily start to roll over as well. And the other thing I would say is if we get below today's low tomorrow, especially if we get below the low that we put in last Thursday on December 7th tomorrow, yeah, I think you're just going to want to be bearish on the dollar, on the DXY. So what that'll probably mean is most likely bullish stocks, bullish equities, and commodities. Commodities would probably be looking good. Kind of been mentioning this for the past couple of days. I was wanting to see it come back down into this kind of level, and it kind of came back into that level yesterday. Going to take a fib of this little move that we did put in. A big reason why. Well, that was the 62% retracement area. You can see it got into that yesterday. It's kind of hanging out there again today. So it could definitely start to sideways consolidate here. It's now kind of doing that a little bit today. We'll see what happens over the next couple of days. But yeah, if the dollar starts to drop off, coming out of the Fed tomorrow, gold GLD is going to look pretty good. And then people are going to be chasing this as it starts to run back up to this all-time high that we just put in 2 Fridays ago, right? 2 Fridays ago. 2 Fridays ago, the gold futures was last Monday, a week and a half ago. So, yeah, this would be an interesting one. If dollar DXY, turns bullish here over the next day or 2 or 3 or week or something like that. I'm not saying gold's not going to go bullish, but it's going to struggle, and maybe it comes back down a little bit lower. Definitely gold's been outperforming pretty good, especially since this kind of bottom area that it put in back in October. Gold's been performing very, very well. 10-year yield. So 10-year yield, nice little lower wick today. Definitely, man, not much really to say on dollar and yields, really, because we're going to find out tomorrow. Yeah, you can see a nice little pop this morning. That was when we got the CPI data about an hour ago. A little bit of a drop there. We had some treasury auctions going on today. So, yeah, we'll see what happens going forward here with the yields. As well, we're going to find out tomorrow kind of what's going on. 2-year is interesting, though. Man, kind of scratching my head here. Like, the 2-year, this is the one that a lot of people say the Fed tracks or kind of follows for its Fed funds policy. And you can see here over the past week and a half, it hasn't continued to drop, and it's and even Friday of last week, it had a nice strong pop. And not to say that the 10-year yield didn't move higher either, but it didn't move higher as much. And with how strong the 2-year is staying, it is really interesting that the 2-year is staying as strong as it is. And it kind of gets me to think that maybe we will see yields start to climb again. Because you would have thought we would have, and maybe that just goes to show you how strong the economy is, that it doesn't need help. I don't know. Well, we'll see what kind of shapes up there on the yields, especially that 2-year. But yeah, that's kind of interesting. You can see the 10 and 2 inversion continue to kind of drop off here. We've never seen it in, I don't think a yield curve inverted this long. So kind of interesting. Yeah. And I wonder how much China's economic issues with real estate and stuff like that are, people are looking for safe areas like bonds and stuff like that. HYG, nice little bounce today. This thing definitely looks like it wants to just continue to break out. Nice pullback into the 10 EMAs here over the past day or two. Looks pretty good there on the HYG. LQD, nice little pop here. It's kind of interesting the bonds are that bullish, or as bullish as they are today, especially with, we're not seeing a huge drop off anymore in yields, and we saw a pretty good bounce on yields during the trading day since we got CPI data. Right, we're definitely off the lows. So TLT is the one that's kind of lagging behind. Definitely a lot of volume dropping off, even though it's been bullish volume over the past about week of trading. TLT definitely dropping off quite a bit. Okay, I do know it was into that low that we put in last year, a little bit over a year ago, that October November low. So it's kind of mixing in there. We'll see if that is enough of resistance to push us back down, which would push yields back up. How's like longer term yields? 30-year, a little bit of a lower wick there. Hasn't quite broken down. Down 0.5%. Okay. So yeah, I mean we had CPI and we had Treasury auction today, but yields look like they were just kind of bearish all night. You can see just kind of all night they were just kind of rolling down until we got to CPI. Okay. Take a look at that intraday sector rotation. There we go. So sector performance. There we go. All right. So sector performance on the day. Energies is really disrupting things. I'm going to take a look at energies right after this sector rotation. We'll take a look at energies, crude oil, and stuff like that. Materials definitely outperforming the most on the day. Nice XLB there. Financials, tech, industrials, healthcare, all outperforming on the day. Real estate, discretionaries, barely underperforming. And then you got staples, utilities, energies, the biggest underperformer on the day. Okay, let's take out the gap. Wow, materials. So materials had a pretty good gap up. They're the best performing. They're the best performing sector on the day. Yeah, you can see they started pretty high and then they just got sold off on the open. So materials underperforming intraday, mostly because they gapped up pretty good and they got sold off. Energies also underperforming pretty good. Staples, utilities, discretionaries. Communications are in line, as well as industrials. Outperforming is healthcare, financials, real estate, and tech, the biggest outperformer. Nice little bullish move about an hour ago. All right. Okay. Always kind of good to get an idea of what's going on out there in the marketplace. Take a look at some crude oil real quick. Crude oil futures. There we go. Ooh, man. Okay, so I think we kind of looked at this last week. I might not have looked at it all that long. So last week, kind of looking at this, and we're gonna make a run down to these lows because there wasn't much in the way of kind of some of these breakdown levels once we had kind of made these breakdowns last week. And man, that's a huge drop. 4% down on the day. That's a massive drop. So crude's probably going to keep coming down. The question is how's gasoline and how's heating oil? So gasoline's dropping off pretty good, down 3.5%. Heating oil. Now heating oil marks is the main marker for diesel and jet fuel. So this is very important to also kind of keep track of. Heating oil though, down 3.9%. Energy market's getting hit pretty good. Now the reason why it's kind of important to watch some of these energy markets is they have a great pulse. Historically, they have a great pulse on economic activity. Now, the other one would be copper. Copper has a great pulse on the economic activity as well. But copper's not singing the same tune, especially here over the past month. If you take a look at that crude oil, and even back in September, crude oil and gasoline diverged big time. Gasoline dropped off quite substantially, starting there in late August, and crude oil continued higher. But you can see, crude oil dropping off, and you just saw that, copper is not. So, kind of interesting look there on some of the energies, maybe even some of the commodities.